What's going on, everybody? This is Curtis. Welcome back to the channel. In today's video, we're going to be discussing the bear case against butterfly networks. Now, if you haven't seen my last video and want to check that out on the bull case, I'll link that somewhere in the video here for you to watch. Now, as a side note before we get going, I want to point out here how important it is for investors to actually know the bear case of any investment they make. From my experience watching YouTube channels, there are plenty of people out there that are willing to give you the hype and the bull case for the investment, but very rarely, if ever, do they give you the bear case for the investment. Now, this is not to be a downer or a hater when it comes to this stock or any other. This is just to be a realist. Every investor should understand the downside potential risks to any investment that they make. And by being a more educated investor, you're more capable of getting out of investment that's not working out in your favor and understanding why it's a good time to exit the position. On the flip side of this, if a stock is going down, but none of the bear case has played out, and you still like the bull case, that's just extra incentive for you as an investor to buy more of the stock if you still believe that the bull case is a much stronger likely outcome than the bear case. Ultimately, knowing what you own is going to help make you a better investor. Alright, so the bear case for Butterfly Network comes down to two items. The first being valuation. Butterfly Network is currently trading at a valuation of over $2 billion. This valuation comes against revenue of just $16.5 million in Q2 of 2021, and the company is projecting that for the full year 2021, they'll see total revenue between $76 and $80 million. This would mean that they're trading at 25 times their full 2021 revenue forecast. And just for comparison too, other companies in this sector like Medtronic, Boston Scientific, and Baxter trade at anywhere from 3 to 5 times sales. So this would mean that Butterfly Network would have to grow their revenue at 50% a year until 2025 to hit about 5 times sales. That is assuming the stock price goes absolutely nowhere from here. It's good to keep in mind too that revenue from Q1 of 2020 to Q1 of 2021 was 43% growth, and the most recent quarter, Q2 of 2020 to Q2 of 2021, was 40% growth. So the assumptions I made here are actually that they're growing faster than their last 2 quarters have shown year over year. If you drop their yearly revenue increase to just 40%, it's going to take until 2026 to reach that 5 times multiple. Now there's a slight caveat to this as well, that if they're growing at 40 or 50% revenue growth a year, they're going to trade at a pretty high valuation compared to the other companies that are not growing anywhere near that fast. But on the other hand, if growth does slow down and it slows down to 20 or 30%, that 25 times sales multiple is going to decrease quite rapidly, and this investment might take a lot longer to pan out to the $2 billion valuation they're currently trading at. The next major concern here for the bulls, and the reason bears don't think they're going to live up to this valuation, is competition. Just because a company like Butterfly Network has a great device now does not necessarily mean that they're going to have a great device in a market all to themselves in the future. What companies ultimately need to keep others away is a moat. I will make an entirely separate video at some point talking about moats, but for right now we're going to focus on the competition that Butterfly Network is currently seeing. So for Butterfly Network, their competition is currently coming from companies like Clarius, Cosmos, SonoQ, I hope I'm saying that right, and GE. Alright, now I'm not a doctor, I've never played one on TV, and I didn't stay at Holiday Inn Express last night, so I'm not really able to tell you in detail about the pros and the cons of each device. There's a lot other more credible doctors and other YouTubers out there that have had hands-on experience with both these devices and know what a good device does and know what a good device doesn't. So I'm not going to try to provide that insight for here. There are other better resources out there that can provide that insight. However, what we can do is look at the product market fit. So to do that, we're going to take a look back at the bull case and break down each of the main points highlighted by Butterfly Network themselves and see where the competition can compete on each of the points. The first point is expanding point of care. The idea here is that with a smaller device, their machine could be used in more settings by more people. All the other companies highlighted all make a small portable device, so they're all able to compete when it comes to expanding point of care. The next item is geographic reach. The reason these devices aren't currently all around the world is due in part to access and affordability. So if a developing country wanted to buy thousands of these for their doctors and nurses, they're probably going to go with the cheaper one because they can just afford more of them. So if we just compare price, Butterfly Network is not the cheapest on the market. So on this point here of expanding geographic reach, Butterfly Network actually probably has a slight disadvantage relative to some of the other competitors. The third major bullet point Butterfly Network highlights is expanding use cases. This point again hinges on the product's portability and affordability. If a hospital here in the US is going to buy $20,000 worth of ultrasound equipment, they can buy, let's say, 2 cart machines or 10 or so of the butterfly machines. By having more of the machines, the butterfly machines out there in the hospital, more different types of doctors are able to use this on more different types of patients, expanding the use cases throughout the hospital. And the thought goes that the more doctors and nurses are used to using these, the more the hospital and the doctors will request these and the more they'll ultimately buy. The other companies also make a small portable device, so they're all able to compete with Butterfly Network on this point in particular. The final point I highlighted in my video on the bull case for Butterfly Network was their wearable device. Now, I did a little bit of quick research and didn't see any other company in development for these, although there were a few other articles out there from 2008, 2012, but nothing seemed to be in the realm of what Butterfly Network was trying to do, so they still could be the first to market with one of these, and that's actually a point for the bulls in this category. However, with all that said, the bear case here is not necessarily who has the best or worst product right now, but who has the best R&D and is going to keep putting out better services and better products to compete with each other over time. Additionally, if we tie this back to the original point about valuation, Butterfly Network needs to grow pretty rapidly over the next 3 to 5 years to keep up with this valuation. If competition heats up and the growth slows, this could be a pretty big hit to their valuation multiple and really pull down the stock price. And when it comes to competition in 4 or 5 years, I don't know if even the R&D divisions within these different companies actually have a great idea about what's going to be in the market in the next 4 to 5 years. So as a retail investor with zero inside knowledge, it is nearly impossible to understand or have any idea of who's going to have the best product over that same time period. Even the videos I've seen now have some pretty good even comparisons, as I understand it from my completely novice perspective, that some of the GE products or some of the Clarius products or Cosmos products have just as good, if not better, video and viewing quality of the body part being inspected, better than the Butterfly Network product itself right now. So the short answer here for the bear case is that where there's competition, there are lower margins. Overall, these two arguments can be made about pretty much any startup device company. In this field in particular, there seems to be very little to ensure that your competition stays away, which should mean that the market will be pretty fragmented between the 3 to 4 to 5 different competitors, each of them having around 10 to 30% of market share. So for the time being, there might be a big growing market out there where all of them can compete with each other and all of them can sell well, but as the market matures, again, this is where the competition comes in and margins get reduced. Well, that's it for the bear case. If I missed something or you have a comment, please leave it down below. I'd love to read and learn more about this company and something else I might have missed that I can include on future videos. And on that same note, I do plan to make more videos, particularly just about the comments that you guys leave and anything I may have missed, trying to follow up on any additional research I should do or any interesting points you all make. I think it'd be a good way to make this more of a community aspect. I learn from you guys learn from me. We all kind of share research and share our knowledge, and we all learn and expand together. Well, that's it for this video. If you enjoyed, please leave a like. Don't forget to subscribe for more content, and I'll see you all next time.